Hello and welcome to a beautiful Monday on Crypto. Oh my God, there's like a lot of news coming out across the stablecoin battle around digital asset treasuries. That's, those things on Wall Street that are accruing a lot of coins while everything's happening all at once. Nation states, everybody's looking to get into crypto. It looks like it's crossed the Rubicon and it is practically everyone but retail at this point. So let's dive right in. Bam! Look, I know I covered stablecoin week last week, but it just keeps moving. We have MegaETH, which I've covered in the past if you want to dive back in, which is a massive parallel ecosystem to Ethereum. It is a highly scaled L1 that taps into the EVM, and they're introducing Mega USDC. Now, I am bullish on MegaETH. I think they're building an amazing chain with high throughput, very small team. It's the kind of stuff I like to see, and they've created a really strong community. But what is the Mega USDC? Now, it's being backed by Athena Labs, and Athena is one of the premier yield sharing tokens out there. What they do is they take in your USDC and they go and they buy either spot staked ETH or spot Bitcoin. On the flip side of that, like a fund, they go short in the other position on perpetuals exchanges, on perps. Now, perps, if you recall, unlike options, they stay open. And when somebody wants to go short or long and they're at odds against the masses, a perpetual contract will pay them to take the other side of that trade. So very often Athena is capturing the funding rate, that little bit of payment from being on the other side of the trade. Now, by buying an ETH and going long and then shorting one ETH on the perps market, they have found generally a 19% return in this funding rate strategy. So far it has worked really well. Now, that's going to be at the bottom of USDM. So any dollar that comes into USDM is going to go into this Athena strategy. That generates perpetual yield on the stablecoin. So again, Genius says that issuers can't share yield, but it doesn't mean protocols can't. And that's why building on top of Athena Labs is going to be something that makes this a yield-bearing stablecoin. Now, the big difference is that MegaETH plans on capturing that yield and using it to fund the ecosystem, to offset costs, to reduce gas fees, just to make it a generally more productive asset for the MegaETH ecosystem. Now, surely that yield will be utilized in a variety of different ways, with different applications being able to take advantage of it, but we have issuance through Athena's new stablecoin software as a service stack with USTB at its foundation. Now, USTB is primarily backed by BlackRock BUIDL. The BlackRock BUIDL fund is a money market fund. They take in your dollars and they execute on a variety of short-term strategies like T-bills, like short-term loans, things that are pretty low yielding but pretty risk off and quick. So we are seeing the sort of infrastructure build out where we have this massive money market fund coming from BlackRock that is at the core and is now extending outwards into stablecoin products. So very interesting. And what they're saying here now is by internalizing the USDM's yield, MegaETH will run its sequencer at cost with the opportunity to leverage proceeds for the benefit of the community. This is basically saying that the core cost, which is running, if you remember from my MegaETH breakdown, they have one giant centralized sequencer. Then they have smaller ones that break off so people can contribute to the decentralization, but the way they achieve these speeds is a beefy fucking machine at the core. They are going to use this yield to pay for that machine to be operated and basically say the core company is going to have its funds and finances covered. And of course, the greater this ecosystem grows, the more the yield there will be. Maybe it extends beyond covering this core ecosystem and it can go outwards and be used for honestly starting to resemble Barachain's kind of proof of liquidity, in which they allow different applications to tap into the inflationary supply of Bara. MegaETH may have a much better approach to this by allowing applications to plug into the yield-bearing capabilities of the BUIDL fund, which is a much more robust financial structure, right? Stablecoin returns versus the inflationary supply of Barachain, which has no value until we give it one, right? Now, this continues to expand outward with Hyperliquid, the biggest perpetual exchange market that is decentralized, right? Binance greatly outweighs it now, but Binance is KYC'd. You need to become a user. Hyperliquid, you just log in and you start fucking trading on chain. They've also come out with this announcement that they want to launch a stablecoin. And of course, it makes sense. Stablecoins are vast products that allow you to capture a lot of yield and to segue people into your ecosystem. Now, the interesting thing is that Hyperliquid, if you remember one of these sub 20 person teams doing $1 billion in revenue, they've said, we don't know exactly what what we want to do with our stablecoin, and we're putting out a bidding war. So we've got native markets, Phage, we've got Paxos, we've got Frax Finance, we've got Team Cornelia, and they all have their different proposals that are coming in here. This is a wonderful sheet by There Will Be Moon, and if anyone wants to dive in a little bit more, feel free to follow my sources in the description because there is a lot of meat here. But this is a really fun alternative, right? They're not coming out with a set product. They're saying, we're looking to build the best one. We want that competition in the market to help us get there. We're not just going to push out a product. This also means that the team has a lot less requirements. Again, Hyperliquid showing this sub 20-person team. They don't need to bring on new talent. They can let the other teams that already exist kind of build the product for them. So this is showing the scale and the capacity that you can generate with crypto, with blockchain rails, with AI capabilities, and just with sheer partnerships. So really cool strategy, and we'll see how that unfolds. It's something I will keep my eye on. Now, the other thing, we cannot ignore these digital asset treasuries. These are nuts. They're picking up steam, and a lot of people are knocking them. They're saying, hey, this reminds us of the leverage products that happened around FTX, like Celsius, like Voyager, whatever. Those were all lenders, and they stacked their risk, and they blew up when they took on bad risk. That's what happened. Now, the thing with these digital asset treasuries, they can buy these assets and they can hold them, and if they're performing better than their NAV, they can issue more shares and they can scale. But if they don't go into positive performance, I mean, it's pretty great. They don't have to sell their underlying coins. They can allow the share value to go down. They can rely on just the accrual of the coins inside their treasury if they work positively. And at the very least, they can just go bankrupt and say, fuck it to the world. So there isn't a lot of pent up risk and leverage inside of these things. And that's why they're proving to be so useful. Now, I do think they're a bit shady if they're taking in other people's locked assets and providing those liquid shares in return. That starts to get grimy, but there's a lot of different ways that these are working, and the well-managed ones will probably live on forever, and the poor ones will just face bankruptcy. We've already seen a few collapse. But look, we have Aitco holding stock skyrockets over 5,000% amid WorldCoin strategy. So WorldCoin, coming from the OpenAI offices, it's an offshoot, which is a proof of humanity asset. They scan your retina, they scan your face, they scan your biometrics, basically under the assumption that AI is going to wipe out a lot of jobs. WorldCoin's thesis is we'll provide you a universal basic income for sharing your biometric data. They're going to want to use that to log into accounts in the future. Basically, the same way your phone and its trusted encrypted enclave, the T, holds your biometric data to unlock your phone. They're looking at this at scale. They're saying, hey, people are going to use this to log in. That biometric data is going to be useful. We need proof of humanity in an AI world, which is something I agree with, and they want to pay you for that data. Now, they put it in, and of course, we're seeing a huge surge. WorldCoin itself went up like 50% today, so fuck yeah to WorldCoin holders. There's more stuff happening in the industry with coin shares and digital asset manager that's been huge. Meltem Demirors comes out of CoinShares, and they're listing on Nasdaq for a $1.2 billion SPAC deal. So there's just so much more crypto digital asset management coming into the public equity space. As we continue, Hashkey, major players in the Hong Kong sphere, they have the only securitized asset license, and they're very much the sandbox for what could happen in China. They unveil a $500 million digital asset treasury fund. So they'll be putting capital into these DATs. We continue with the announcement of Forward Industries from Solana, and this is with Galaxy Digital Jump Multi-Coin, and they've raised $1.65 billion. Now, what's interesting about this is no Solana was contributed, no locked Solana was contributed. They're raising purely $1.6 billion to go out and fucking buy Solana. If you don't think this is a massive bull signal for the Sol asset, well, I got some bridges to sell you. But this is absolutely insane. We are seeing the demand as voracious and unstoppable. And of course, this comes back into play. We're seeing these huge Bitcoin sales, right? Bitcoin faces pressure as long-term holders sell 26 billion. We're getting all these whales to come out and sell their coins now. But I got to ask you, we've been at 120. We're trading flat at like 112. Why would they start selling now? Why not sell at that jubilee of 120K? This makes me come back to that Udi Wertheimer statement that I did an entire piece on, which just says that, look, Bitcoiners are running out of Bitcoin. There's not enough Bitcoin out there for the TradFi interest, for the institutional buyers, for the states that want to accumulate Bitcoin. So it could be that we're facing backdoor deals where people are saying, hey, we'll buy this Bitcoin off you for so much money, but we're going to sell it on the open market. We want to depress the price of Bitcoin so that we can go buy some. So don't let people scare you here, because in the inner circles, the people that are trying to buy Bitcoin en masse are saying there's just not enough out there for us to get our hands on. And of course, we see this again with Metaplanet, the most popularly traded stock on the Japanese stock market, adds another 136 Bitcoin. So we do have to contend the fact that we're seeing these huge sales with this massive buy-side interest. And of course, look, the NASDAQ is making its own push to launch tokenized securities. It's obvious that the blockchain is a far better solution. We have now digitized the nature of value. We don't need it to be printed on paper. We don't need separate ledgers to have to compare each other to reach finality. We can do this instantaneously. When you have instant finality, we can unlock brand new financial applications. Imagine taking out a loan and settling that loan in the same block. That's called an atomic swap. Now, I got to end with this really cool thread from Hodl 15 Capital. I will say I don't know them super well, but the thread was just a very nice compilation of the 2025 will be the strategic Bitcoin reserve year. And God, do they keep going. There's like 25 posts to follow up here, which starts with El Salvador. We all know about that. The US, the EU Parliament talking about member states investing in Bitcoin. We're looking at Japan opening up a Bitcoin strategic reserve. We have Germany's ex-finance minister basically saying, what are you doing? If you're not doing this, you're going to be left behind. Poland trying to get in on the game. Russia's talking about it. Switzerland's talking about it. Brazil. By the time you get to the end of this, look, we're not just talking about companies on the stock market launching new ways to create these liquid treasuries. We're talking about nations doing it. And of course, as you get to the end, it really starts to become states doing this independently, whether it be North Dakota, whether it be Oklahoma, Wyoming. We can see that everyone that has a sovereign incentive in the future is trying to stock and accumulate Bitcoin. This is all very bullish when people say, oh man, 26 billion is being sold. And like, maybe take your chips off the table. Maybe the fiat collapse doesn't really matter when you're a multi-billionaire from your, $100,000 investment in Bitcoin, or $10,000. Who even knows what it is? But the demand to purchase these is voracious. We've got California, Wyoming, Massachusetts, Arizona, like it just keeps going. So anyone that's telling you we're at the top, I gotta say that's absolutely maniacal. I do think with rate cuts being obviously coming in September, we are at the beginning of a crazy hyperbolic curve. Now, what happens to the dollar itself as our administration continues to take advantage of it, continues to exploit these mechanisms to pull in more dollars from their crypto businesses, or just destroys the trust in the foundations of the United States, like the Fed's independence? Hard to say what happens, but for now, as we're seeing with USDAI, which allows you to put USD against data center scaling, or with Athena and the BlackRock BUIDL fund, if we have the USD as the dominant currency of conversion in these new protocolized banking mechanics, these yield-sharing mechanisms, well, that's going to be amazing. And as we saw with Stripe's new protocol Tempo, it's going to automatically convert any currency in the world to the dollar stablecoin. We could be looking at the techno petro dollar, and it's revolutionary. I don't know what happens if we destroy all trust in fiat, but we are certainly building up its hegemony on the technical side, on the digital front. With that being said, the markets, they go up, they go down. I couldn't tell you which way they're going to go tomorrow. So don't lever up, stay safe. And as always, I'll see you tomorrow.